Good evening and welcome to the Lock in Your Success Trade and Market Update for January 20th, 2013. As we were stating last week, we were thinking that the market was going to continue up into expiration, which if you look at the Russell chart, it clearly did. Let's go over and look at the S&P chart real quickly. Here we got our continued up move right into expiration, which is what the market's pretty much been doing most of the last year. So if we come back to the Russell, then we see that here, especially with that, because the Russell has actually absolutely been on fire since mid-November. This move has been crazy, a very, very large up move, one of the larger ones that we've seen. It's not the largest in history. If you will go to about 160, that would be the largest in history. We're only 765 to 865 is 100 to 192 about 130, 140. So we are reaching the point where we are extremely overextended and we're likely to pull back. Like I said, I had set a target out for the expiration month of February to be down at this 860 level. Am I rethinking that? I said I might rethink that if the SPX breaks out. If the SPX has broken out, if it holds that breakout this week, then I will raise this target. If it does not hold that breakout, obviously this target is still very, very valid. But I would expect at some point during next week that the market will start to retrace and back off a little bit because we are severely overextended. We do have earnings season, which could obviously push us higher if we have good earnings, but we'll have to wait and see there. So at this point, the market is very, very bullish. Let's look at the SPX once again. And I actually accidentally deleted all my drawings on the SPX, so I had to come in and recreate some stuff. So you'll probably see that some things are different. But I do consider this area here a valid breakout. The best trend line I could draw as far as height from previous highs, where this is likely to go, is right up around the 1500 to 1505 level. Is it going to get there this week? I don't know. Like I said, we're awfully overextended, so I wouldn't be surprised to see a reversal at any time. I would not be surprised to see us come up and push this 1500 level. We're just going to have to wait and see. Like I said, it is earnings season, and it's going to be a little bit news driven. I would expect, however, this area to hold around the 1470 level. If that fails, then we're probably going to go deeper into our pullback. If we take a look at the Dow, we've come right up into our resistance level. If we draw this line in here from the previous highs, we're sitting right there. This here is going to be our next telltale signal. If the market backs down off of here and blows back through, then everything goes higher. If we start to get a significant retracement, or if the SPX drops out and breaks support, then we're going to get a retracement of the Dow, probably back to this 13.3 level. Right now, I'm still pretty bullish. So even though we are overextended, I think we do go higher. I think this probably breaks out. Again, I think the Russell goes a little bit higher also. Towards the end of the week, though, I do think we will turn back. Let's see, as far as the NDX goes, we broke our box range. This gives us a price target. I'll call this 2610 to 27,800. So that gives us 90 points. That gives us a 90-point target to the top, which puts us right about up into here. So this has more room to go higher also. Again, that leads me to believe the market's going to be a little bit higher towards the end of the week. There's the SPX. Looks like it wants to go higher. Here's a Russell way overextended. I would think this was going to stall a little bit as the other indices go higher at some point. And like I said, I'm looking for a break back down to here still. We'll see how the SPX holds out, and we may revamp our opinion. So, very bullish market here, everybody, and we'll have to see what the news of earnings brings. Let's take a look at our positions. I set myself in back trade to go back to Monday to remind you of where we were with the January Bearish Butterfly. We were sitting right here, thinking that if we come up and get to a certain point, I was looking at exiting this. The market was so flat and so predictable last week that what I decided to do instead, when I came in here on Tuesday, I tightened this up a little bit. I moved these 820 butterflies up, and I moved the 850 butterflies up to 870, and that gives us something that I'm not sure what time I actually did that. Let me take a look here. All right, yeah, this wasn't completed till 1500. So let's go to the end of the day, and you can see I really tightened this up to this position here, where it gave. Let me back this out a little bit. 27. And we came into this position, and I was just waiting to see and have it sit and possibly take a small profit. And if we move this forward 2 days, actually 1 day, we know the market did continue to climb. The following day, we pushed a little. We got kind of sat flat. We're going in and we're down 1400. I decided to keep it overnight into Thursday because, like I said, the market was behaving so well. So we come in here Thursday morning. And because we're so close to expiration, that 1 day did make a fairly large difference. And when we came in here, we're only down about 285 now. Now on Thursdays, most of you know I do go skiing, and I don't want to sit there and watch the market all day. So I did exit this thing at around 10 o'clock. And here's the position before we exited it. Right here, and then it was closed, and after commissions we took like a loss of about $400, which is on a $50,000 trade a little bit less than 1%, and that's including commissions. So that was a very nice recovery because we were down. We nearly touched maximum loss twice in this trade. Like I said, we had some crazy price movements during this duration. We almost hit max. We went in a low volatility environment. We ended up, having to get into this and get on top of the market. And then we had this large volatility crease on the downside, and then this rocket up. So that almost put us out to the downside. It almost put us out to the upside. But after this time, we were able to recover. So that's good. That was a good get. We shall see how February goes. And speaking of February, let's take a look at that. Here is our live February bearish butterfly position. Let's just scoot back to the beginning of the week on this too. As of Monday afternoon, we were sitting here and talking about. We were sitting here and we're down about $1,500. Our position looks like this. Let's back us out. Our position looked like this. We were exceeding our maximum delta number. I did let this go overnight. And after the following day, we came in and we rolled these 850 butterflies all the way up to 890. So we came in here, I believe it was the following day, as per guidelines, and we went to the 870, 890. We were over 880, so we could do that. And that cut our delta down to minus 284, and theta to 418, and we're down about $3,000, which isn't a ton for this trade. All right. So that's what happened there, and then I don't believe I did anything till the end of the week, which is the 18th. So we come into the 18th in the morning, which was Friday, and as you know, the market continued higher, and anything over 890, I'm able to put in my 910s. By the end of the day, I believe we were pushing 890. We're up at 891. I went ahead by guidelines. I added the last third in. And the position now looks like this. It's down slightly. It looks good. If the market holds up and doesn't crash, this will be a very good trade. More than likely, I'll be able to continue to follow this to the upside because the market's overextended. It's probably not going to blow off too much more. So as long as the market hangs out and does not get too far to the downside, which is what I'm most concerned about with the low volatility levels, then everything should be go very well this month. I also entered the March bearish butterfly. So let's take a look at that. I entered at 880. And the reason I'm so close to the market is simply because of our delta theta ratios. Had I tried to enter this at 870, I would have rather have entered it at 870. I had a bad delta theta ratio. I almost have a bad delta theta ratio here. So I did enter this earlier in the day, which is why it's up money. And this is what the position looks like. I got what I thought was a really good fill on it. And here we are with our bearish butterfly for March. I'm very, very excited about this trade, actually. The chances of the market outrunning this thing is so, so slim, and I'm not really concerned with the down move either. So I really, really love the trade this month. It looks like it's going to go really well. And I have one other trade I wanted to show you, which was the January rock trade. I'll show you what that looked like on Monday, which is right here. On Monday, this thing, let me back it off a little bit. On Monday, this thing was up almost $10,000, like 9,100. As the market continued to rise, we continue to add into this position here. Let's see what I did here in the T-log so that I can remember. Okay, so we made a major adjustment on the 15th. If we come in here and see what we have, right now we have 10 butterflies at 860, 10 at 880, and 7 at 900. At the end of the day on Tuesday, January 15th, we now have 8 butterflies at 860, 20 butterflies at 880, and that is it. That's what our position looks like, and it is here. And let's see what else we did here. We did not do anything until we closed it on the 17th. So we come in here the morning of the 17th, which I didn't think we did anything else. Let's see what time it was closed out. I think it was early in the morning because that's when I had to close everything that day. Yeah, it's 10 o'clock. And we'll see what it looks like at 9:30. At 9:30 we are up to our profit, over our profit target of $10,000. Our position looks like this. There's really not a whole lot of point staying in much longer at this point, especially since I wasn't going to be home to watch it and the market was bullish coming out of the gate. We went ahead and closed this out, and if we do our reports here, this ended up being closed out at a profit of $10,446 after commissions. That was a good trade, good profit target trade for the month. And I will show you the rock trade entry that I made on Friday. So I did enter this trade. I didn't enter till Friday because I wasn't out of the other one till Thursday. I really didn't have time to put the position on. So here is our rock trade entry for Thursday for our February position. It's right here. This is our February rock. We bought 10 880 put butterflies, and then we bought 6 920. Do you believe we're buying 920 butterflies? And that gives us a delta of about minus 39. This is what the position looked like at the end of the day. It was down a bit of money, but this is what we look like. And like I said, as long as the market holds up, this position will do very well also. So if we have continue to have a flat or grinding up market, then we're going to have a very good month, bearish butterfly and rock trade. We get a harsh down move. February bearish butterfly is not going to like it. Rock trade is not going to like it. The March bearish butterfly is going to love it, as will the M3 for February, which I did not show you guys yet. As of right now, the M3 for February is sitting in a position like this. Here's what we look like. We have butterflies way back here at 850, and we did add some verticals in this during the week, and I'm not sure if I reported on it or not, but on Friday I did add 5 850, 860 verticals, and on Thursday we added 5 850, 860 verticals. So we have 10 850 butterflies, we have 3 Russell 830 calls, and we have 10 850 butterflies, and again 10 850, 860 verticals. Our position is showing slightly positive vega at this point, so we are due for an adjustment if the market doesn't drop out on Tuesday when the market opens. But as you can see, the position looks perfectly fine. If we get a continued up move, we will end up rolling these forward. And if it kind of sits here, we may do some more vertical power to have that again, because like I said, I do think the market's going to close out in this range at expiration, so I might be a little more tendent to hold this position a little longer than normal. But that is it. That's my market outlook. These are the positions that we have on, and I'm looking forward to the rest of the month. So have a great long weekend, everybody, and I will update you with any changes. Thank you and good night.